Hello everyone, Will Hassel here once again for your weekend review and your week look ahead video. Markets were a bit volatile to the downside this week. As we see here, I have the Dow Spider, S&P Spider, and the QQQ Power Trust. Wednesday we really hit hard based on those good retail sales numbers. The entire week, the Fed tapering has been caught in the eyes of traders. Many are saying that we may see a taper next December. I don't think so. A lot of people don't think so because it would be extremely rushed. And that taper, most are expecting March being the starting of the taper. But nonetheless, traders got confused on traders are getting confused on where the Fed may taper because of all this good data. They are saying that the Fed may taper sooner than we might have expected, and that was really what was in focus this week, along with the budget deal that we saw come out of the Senate. That we saw coming out of the Senate. Not the Senate, but the budget deal coming in, getting voted on by Congress on Friday. Many are saying that it's the Christmas miracle, yet the Senate voted down, and the Senate will go and vote on it on Tuesday. But other news, President Obama named the Fed's vice president as Stanley Fischer. He is the former governor of the Bank of Israel. Many people are saying he did this because improved relations with Israel gives us some more global connections in terms of the Fed. I'm not looking too much into it. Don't know a whole lot about him. I've heard that he's very smart, though. Some other news that happened was Hilton's IPO came out. It came out as an initial public offering of $20 a share. I actually don't know what ticker it traded under, but I do know it did fairly well. Blackstone Group was the people that brought them public after bringing them private. Did fairly well. I expect it to do fairly well in the future, being it is one of the largest I think it is the largest hotel chain by rooms. Looking at the markets here in the Dow, Wednesday was the really big, tough day. Thursday was, other than that, it was pretty muted except for Wednesday. Wednesday really brought in that downtrend. Markets closed above its almost all of its moving averages there for the SPY. As you see here, we are carrying in some from that momentum from last week and just brought it down on Wednesday. Closed below its moving averages there. It's 21.50 and 200-day moving averages. For the QQQ, once again closed below. Didn't have help that Apple closed down 1% either. But tech really didn't have as bad of an initial decline in the week as you see here, pretty much flat as compared to a sloping decline there. But they all ended off about the same when we look at them all against each other. This week we have a pretty big slew of economic data and news. Bankruptcy judge will be deciding on Tuesday whether to sign off on a $35 million loan for Detroit. This is opposed by the unions, bond insurers, and retiree groups. Detroit's kind of in swing because it's kind of having a little bit of effect on the muni market there in Michigan. On Wednesday, FOMC announces its decision on rates. Probably gonna. I don't think we're going to see a rise in rates. I don't. ITG's Blitz says that the chances are 60-40 in favor of the start of tapering, so we may see a rise in rates. I don't think so. Oracle, FedEx, and General Mills all report their quarterly earnings that day. FedEx is going to be key just to go and see retail shipping. Expect it to probably rise just because it's the holiday season. I'm looking at the earnings for FDX. They are expected at 163. That would be the mean expectation. The high is 178 and the low is 146. And then going and Oracle also being another one of those tech giants that you are going to want to look for. I would spy on this I would take careful note of this just because they are a pretty big tech company and they've had a pretty good year. Mean is 67 cents a share, high is 69, and low is 65 cents a share for Oracle. And then on Thursday we have the weekly jobless claims. Friday, the Senate will vote on Janet Yellen's nomination to head the Federal Reserve. I don't think anyone's expecting them to not vote in for Janet Yellen. And then on Friday, also the Bank of Japan announces monetary policy decisions through the following 2-day meeting. That's going to be a big issue on whether Abenomics has been working, whether it's not working, whether it can expand, whether it can contract it. So those are all your big news events. In terms of data, on Monday we have Q3 productivity. The consensus estimate is 2.8%. The last period was 1.9%. So they're expecting almost a double in that number. November industrial production consensus estimate is 0.5%. The last period was negative 0.1%. November capacity utilization estimate is 78.4%. The last period was 78.1%. On Tuesday, we have November CPI. Consensus estimate is 0.1%. Last period was negative 0.1%. October housing starts. That's going to be a key one to go and look for all the home builders and to see how fast the housing market is going, because we did see on November, just checking my time here, November, the October sale, new home starts was the biggest beat in 33 years, so that's going to be key. Watch the consensus estimate is 941,000. Last period there was none because we are still trying to do the government shutdown data. Thursday we have November existing home sales. The last period was 5.21 million. They are expecting 5.02 million. So they're looking for home sales to decrease a little bit. Their November lending indicators, they're looking for a consensus of 0.5% versus 0.2% last period. And then December Philadelphia Fed survey, which is going to be highly watched. Their last period was 6.5. The consensus estimate is 10, and I'm seeing some people are looking for as high as it to go as 12. So that's going to be a big one. And then finally Friday, Q3 GDP. It's going to be the final number out on that. Last period was 3.6%. As we know, that was a massive jump, almost 4%. The consensus estimate is 3.5%, so just a tad bit of lowering. Which overall, if you went and said last year that in Q3 we would be doing 3.5% GDP, I don't think anyone would have expected that. Most people are expecting us to stay at 2%. So that's your look ahead of the week going into some of my positions. I am long QQQ, so we already went through that. Going to AIG, APM, and then also bringing up, oh no, I have two charts for V, so I need this one to be cores. And bringing up chart of Starbucks and V right there. Ooh, Okay, all of them are on their 5-minute, 5-day. Looking at AIG, pretty much went down with the market until Thursday when it was announced that they are in talks with Air Corp on selling their jet leasing business to them. Looks like deals are pretty much going to stay. Air Corp has said that they're not going to overpay for it. I think it's nice that AIG is trying to get something off of its books. We closed just below that 50 handle on it. We saw it go above 50 on Monday. Pretty much closed above its 200-day moving average thanks to that big deal spike, and also closed above its 50-day moving average, not below its 21-day moving average. But if we go and we look at it on a broader 10-5 days, it's been kind of trading in this little range. And if you continue to look at it on a daily for a 12-month, we see it just chopping around right here, although so a break above 50.49 would really need it to send higher. I know I've been talking a lot about it needs to keep breaking higher, but the pattern does look like it's going to be increasing in terms of this little consolidating pattern right here. And hopefully this deal will keep it above 50. We're going to need multiple closes above 50 to go and make sure that the rally does continue there. And then looking over at JPM, had a pretty good day on Tuesday, but then on Wednesday we had those terrible numbers. A lot of volatility in here just based on the Volcker rule. People are getting thinking bank profits are kind of lower. They might, but then again, you never know if the banks closed below all of its major averages. Not a whole lot of news coming out of JPM. Now we start coming into the very interesting parts of my portfolio that happened. Starbucks. I'm just going to start off with this first. I posted an entire video on why to stay long Starbucks that I talked in detail about why it had such a sharp decline on Tuesday, so I recommend you go check that out if you want to learn more. It was basically momentum was slowing on slowing momentum into their stores. That's the basic overview. You can go watch my video. It's on both the Leader site and on my YouTube and blog accounts, so you can go and check that video out for more on Starbucks. V had a very interesting week. It started on Wednesday because despite the rest of the market going lower, they got a boost from MasterCard going and splitting up its stock. So that was the big gain on Wednesday. So you saw a lot of the card carriers get boosted up, especially MasterCard. A little bit of profit taking here on Thursday, and then on Friday it spiked up because the judge did rule on a $5.7 billion lawsuit over whether credit card fees were improperly fixed. He ruled that they weren't, so you saw the credit cards companies, MasterCard, Visa, go and spike higher, but we did not get above this 208 range, which now looks like it's the nearest area of support because we got just below that and it stopped out right there at 208. Broke its previous level of support, of resistance, which was its old 52-week high. If we go and quickly look it up on Scottrade on my desktop computer, I'm currently on my laptop. Its 52-week high is 208, so yeah, that's our new resistance. But it did break above that trading range that we were in for quite a while after the big dump down here. It was in a trading range for so long, started going down, but then it finally broke above this resistance, and I do think there is quite a bit of momentum coming into it. Here, look on the 12-month chart, patterns doing pretty well intact. Here, that new leg higher was really what we need to see in order for it to keep up its upward pattern. But overall, great week for Visa and for MasterCard. I do recommend these as plays for the retail season, because I think they're going, because everyone's paying on these cards, so they're still a good buy even now, even though they're making 52-week highs. Coors was pretty interesting. Got a boost on for retail sales just overall, and then here on Thursday, really interesting move, as we saw some starting to get some upward momentum in the last about 10 minutes of trading that day. We saw a lot of volume. As I go to the 2-day chart. No, don't crash on me. Here we go. As you can see here, 452,000 shares traded, 655 shares traded. So over 1 million shares here traded in the last 5 minutes of trading. Now let me go and say how interesting that really is, because Coors' 10-day volume average is 2.7 million shares, and on Friday it did just about over 4 million shares. So we're talking about in the last 5 minutes, the last 10 minutes of trading here on Thursday, we saw about half of its daily volume in about 10 minutes. So there's some big trading going on here, a lot of buying there, which caused the market to go up on pretty massive volume. But on Thursday opened pretty high here at which it created its new 52-week high of 83.91. It did have a down day on Friday of minus 0.46%, but it got a new 52-week high. So I mean, it wasn't that bad. A lot of selling because it was that 52-week high, but we did close up above 82, which was very good. Didn't close below where that 82.65 mark was. That's why we had a down day, but it was a really interesting move when you look at it, because it's just this ginormous spike. If we look at it on a daily for the year chart, we can see it's just continuing its uptrend like a champ. It's one of my big retail for me, it's one of my big retail winners for this holiday season, because they're expanding so much and they're taking a lot of courses, a lot of coaches' market share, and they're just the really big hot thing if you want something that teens are in. Right now, I see girls all the time wearing Michael Kors everything at my school. Just a brief position update for me. I didn't do a lot of trading, but I am in profit now on Visa. Yay, profit. I wasn't before, and AIG, we were getting there. I did add $125 in my cash balance. I did go and post that on my blog as well, just to go and give you guys checking time, just to go and update you guys, because I am totally transparent. As you can see, these are all my trades, whether they're my one position that's losing me money, or my $3 gain in V, because you take off $7 for commission. I have $3 gain. Yay, $3, at least it's profit. So with that, I think I'm going to end this. I am starting to post all these videos also on the Leaders Investment Club site. So if you have any questions for me, please either tweet me at WillHasselWS or email me at willhasselws@mail.com. The W and H in Will and Hassel are capitalized on that. Also, you can go and ask me any questions on StockTwits. I am at Will Hassel on that. And I just like to thank you all for watching my videos, follow me on Twitter, and follow me on StockTwits. And hopefully you guys go and follow all the Leaders Investment Club members. They're all really smart guys that know about the markets. And thank you for watching.